Single moms purchasing a home. So right now we're currently in a market where, well, currently in real estate, single women in general are outpacing men in home ownership. Right now, single women have 2.1 million more homes than single men. So right now, single women are dominating. A lot of times in my videos, I have people ask me, hey, Kevin, I'm a single mom. What are some ways that we can purchase a home? So in this video, we're going to discuss ways and strategies on how single moms can purchase a home, whether it's in 6 months, it could potentially take you a year, but it's an opportunity for you to begin to game plan on how you can take yourself from a renter to a homeowner. Watch to the end of this video to get some additional tactics that will help you along the way. And if you are new to the channel, give us a thumbs up so we can push it out to the algorithm so it can hit more single moms. And when I say single moms, I mean single moms. Whether your children are of age, where they're an adult, you're still considered a single mom. If your children still continue to live in a house with you, you're still a single mom. This is dedicated to single mothers who are looking to level up in their real estate game. They're tired of renting and they want to become homeowners, but they don't have the guidance or they haven't had anyone tell them exactly what they need to do to become a homeowner. So one way a single mother can purchase a home is obviously using her income that she receives from her job. Maybe let's take a step before that. What we need to check on is the positioning of your credit. You want to go to annualcreditreport.com and pull your credit report. On that credit report, it will show what is on your credit. So you won't be able to get the score, but you will at least be able to see what is actually on your credit. And just kind of take a look at it, be familiar with it, take some notes as to, okay, I'm familiar with this account. I don't know what this is. Just do some things that, prepare you so when you reach out to a lender and they pull your credit and they ask you particular questions about things on your credit, that you will have an understanding, say, hey, I see that it's on my credit, but I'm not familiar with it. And even let's take it a step before that. Even if you're not familiar with it, you may want to go ahead and reach out and see exactly what it is or how you can tackle it. Do me a huge favor. Do not pay off anything prior to talking to a lender. Do not pay off anything, pay down anything other than your normal bills and your credit cards if you have them without speaking to the lender. I'm going to tell you why. Because a lender can give you a game plan on exactly what needs to be paid and how it should be paid. So it gives you the best opportunity to be able to put yourself in position credit-wise and credit profile-wise. So just make sure you have a copy of your credit report that you can get from annualcreditreport.com. Don't worry about the scores that you see on Experian or TransUnion, if you have those sites, or your Credit Karma or Credit Sesame, anything like that. You want to make sure you have a copy of your accurate credit report from annualcreditreport.com. The second step after that is you want to take a look at your budget. How much can I truly afford to pay to own a home? Now, what you can get approved for and what you can afford to pay and what you want to pay are all three different scenarios, right? Right now, a lot of people want the $400,000 house. However, you don't want to make the $400,000 a month mortgage payment. Because you can afford a $400,000 a month mortgage payment, in terms of what the lender says, doesn't necessarily mean you can afford it on a monthly basis without having to struggle. So you want to take a look at your budget and be realistic. If you are currently paying $1,000, $1,200 a month for rent right now, when you're looking to buy a house, most likely in most parts of the country, you're not going to find that as a mortgage payment because of different factors into your mortgage payment. So just take that into consideration, but have yourself a budget. Look at what you can cut, what you can't cut. You also want to take a look at what type of money you have available to you. If you are living check to check, you may want to see how you can increase your income. You may want to see how you can decrease your debts, meaning if you're living check to check because you don't have a budget and you're living frivolously, that's one thing. But if you're not making enough money, you still can look at your budget and start to cut things back. But then you also could take an opportunity and figure out, how else can I continue, or how else can I make more money? Can I pick up a second job? Am I able to take more hours on at my job? Another thing is, if you're a single mom and you receive child support and your child is under the age of 15, as long as you consistently receive that child support, whether it's court ordered or not court ordered, and we'll discuss the difference between the two. If it's court ordered and the father or the person paying the child support has been making on-time payments for the last 12 months and is consistently going into your account, then we can utilize that child support for any child that's under 15 years old. If it's uncourt ordered, but you are receiving it on a consistent basis every month, and you can show us a history of you receiving child support over the course of 12 months consistently, then there's likelihood that we have the ability to use that child support to help you qualify for more. So that's a way, even though you may not be there income-wise from your job, you can use child support. You can also use, if your child receives Social Security and they're under 15, if they reach some type of disability, you can use that as well. So those are all incomes that you can utilize to qualify for a mortgage based off of incomes that you use. Remember, you can use your income from your job. You have the ability to use your child support, Social Security, and or disability for any of your kids that are under the ages of 15. The reason why they have to be under the age of 15, because those three incomes have the likelihood to continue for 3 years. So if your child's 15 and they didn't just turn 15 when you close on that day of closing, there's not 3 years. And when we say 3 years, we're talking about 3-4 years of them having that income coming in that you can qualify for. That's why I say if they're under 15 when you close, then you can use those incomes. The next step is to see if you receive 401k. If you receive 401k from your job and you're not utilizing it, I would advise you to utilize it. Let's look at it from a standpoint of, if you have a job where you receive 401k and your job matches your 401k, that's a way to speed up the ability to save for your down payment, because your job is going to match what you're going to utilize, right? So if they're matching it, those are funds that you can use. And you are able to, even if you're under the age of 59 and a half, you have the ability to use your 401k for a housing event. You can do one of two things. You can take it out as a loan, or you can take it out as a withdrawal. It's up to you what you decide. But if you're in that position, you want to reach out to your 401k custodian and ask them what are the ramifications or what options you have for your 401k being taken out as a loan or withdrawal to be able to purchase a home. So you want to make sure that you're utilizing, your 401k to your benefit, so that this can help you speed up the process of being able to save for a mortgage. Hey guys, if you're new to the channel, make sure you hit the subscribe button so you can get all notifications on when we put out a video on education about home ownership. The next step is, during the course of the year, the largest amount of money that you receive outside of your income is your tax returns. If you receive a tax return, that can be used, I would save it, and that can be used to either one, pay down on debts that you have, but this is after you speaking to a lender who gives you a game plan, as well as saving it to utilize it to help you with your down payment or closing costs. Another step is, once you have figured out what your finances is, because having an idea of what your finances are before you speak to your lender, or at least being familiar with what you have, is key, and it kind of puts you ahead of the game when you're talking to your lender, so he or she can answer those questions for you. So the next step here is to reach out to a mortgage professional that can help you. All mortgage lenders are not created equal. All mortgage lenders will not give you a game plan. All mortgage lenders don't necessarily know how to navigate through the process in order to purchase a home. Because remember, in this case, we're talking to single mothers who typically only have one income, and they have children that they're looking to move from a rental property into a home. And what it seems to them as a daunting task, you need someone, a team that is going to be on your side to help you to fire your landlord and to become a homeowner. So then later on, the next step after you becoming a homeowner is you become the landlord, and then you move into another property, which leads to you don't have to buy your dream home the first time out. What people don't understand is that there's levels of home ownership. You go from a renter, and some people get into a huge house that they want with a huge mortgage. I would advise, if you're not in a position to do that, move from a renter and get into a starter home. There's nothing wrong with starting out small. There's nothing wrong with small beginnings. While you are in that home, you can gain equity. You can gain a sense of what home ownership is. You can kind of navigate through the process and still be able to work on your budget, work on your finances, and get a feel of what it is of home ownership. Typically, the average person stays in their home for 5 to 7 years. After 5 to 7 years, they're ready to move. And once you're ready to move, depending on the market and depending on your circumstances, you could sell that home, take the profit from that home, and use it as a down payment on your new home. Or if you position yourself, and this is all a part of being with a trusted real estate lender who can help you through the process and help you and know what the process is, by saying, hey, I want to keep this property as a rental. How can I make it make sense? And then how can I get into my new property without, possibly selling? Am I able to purchase a home with having a current home and getting into a new one? So those are all things a lender can help you with. Once you go to your lender, you want to make sure you're able to explain to them what it is you're exactly looking to do. What your lender will do is they will pull credit. They should ask you some questions pertaining to your credit, pertaining to your income. And then what we will do is we will pull your credit, but we'll also ask you for a list of documents. The list of documents that are going to be required is going to be the last 30 days of pay stubs. If you receive child support, Social Security, and disability, we need all of those awards letters. If it's one or all three, we need those awards letters. We also need, for the child support, a history of showing that the child support has been paid on time for the last 12 months. We need a copy of your most recent 2 years of W-2s. We need your most recent 2 months of bank statements, all pages, even if that last page is blank. We need a copy of an unexpired driver's license. And then we also need a copy of a second form of government ID, whether it's a Social Security card or it could be a copy of your passport. Those items are very, very important. A list of those items will be listed below in the description of this video. Once you get with your lender and they show you exactly what you need and they tell you what you can qualify for, then your next step is to either get a referral from the lender of a real estate agent in your area, or you could potentially get if you already have a relationship with a realtor, you want to reach out to them and let them know that you have been pre-approved for a mortgage. If you aren't pre-approved for a mortgage, that's where the lender has the ability to give you a game plan on exactly what you need. So when you're sitting down and talking with the lender about what you qualify for, you want to make sure that you have a discussion about if there's any down payment assistance programs that you qualify for. If not, how much you'll need for a down payment, which program you're utilizing, whether it's FHA, VA, USDA, conventional financing. If it's a bank statement loan, you also want to know how much money you would need in closing costs, because down payment is the pay down on the house. Closing costs is everyone else gets paid, the attorneys, cities, counties, homeowners, insurance companies, the processing fees, the underwriting fees for the mortgages. So all of those things are in closing costs. So you're going to want to know what your total cash to close is if you have to bring your down payment and or closing costs, right? Now, I told you guys at the beginning of the video to stay all the way to the end because I'll have a special bonus. I have a special link below down for single moms. there will be a list of down payment assistance programs throughout the country that you could potentially qualify for. Now, for most of those programs, the lender can connect you with the down payment assistance programs. However, this gives you an opportunity to take a look and see if you do qualify, if you do have any down payment assistance programs in your area. That list does not encompass all 50 states. However, I have additional down payment assistance programs that you could reach out to me for. I have programs that qualify in all 50 states, including Washington, D.C., to where we can see if we can help you become a homeowner. What you need to do, the next step is, my goal this year is to help 50 single mothers become homeowners. The link will be below for you to contact me to get a one-on-one consultation for free. Everything we talk about will be a game plan towards getting you to home ownership, whether it's 3 months, 6 months, 12 months, 24 months. My goal as Kevin Jefferson Peoples Lender is to get you into a home. If you want to learn more about how to qualify for a VA loan as a single mom, click the video here. And if you want to learn more about qualifying for an FHA loan as a single mom, click on the video here. Thank you and have a great day.